Hello, this is part 2 of the discussion on business income earners. So what I will be doing in this video is answer some questions, no? But before that, let me first improve some of what I mentioned last time. Under the 8% option, I placed business tax, but this is specifically percentage tax. Okay? And then right here, I place VAT under more than 3 million graduated rates. The VAT I'm referring here is the output VAT. Okay? So just to make it clear. And given that, let's now proceed to the questions. Okay, so let's try this one. You are given gross sales of 800,000, gross receipts of 300,000. You use the 8% option, and you are tasked to compute the taxable income and the total tax due. It's total tax due because if you are using 8%, you can compute both your income tax and business tax. If you get the sum of these two, it's 1.1 million, right? And this does not exceed the VAT threshold. So, no VAT for this one, right? Okay, so let's compute. Let's set the model. Gross income. Your gross income here is 800 plus 300. So, it's 1.1 million. And then for the allowable deduction, assuming purely business income earner, minus 250,000, giving you a taxable income of 850,000. So this is taxable income. Then how much is the total tax due? I'll just write TTD. What's your basis? 850,000 times 8%. The answer is 68,000. Okay, so let's try another. Now let's try this one. You are given gross sales of 800,000, gross receipts 300k, cost of sales 600,000, OPEX, operating expenses 200,000, and you are tasked to compute the taxable income, income tax due, and then the percentage tax. It's percentage tax because your gross sales or receipt was not able to exceed the VAT threshold. This is only 1.1 million. So let's do the model. Gross income 800k plus 300k, so 1.1 million. And then for your allowable deduction, the problem is silent, so you use itemized deduction. So you write your cost of sales plus your operating expenses. This is 800,000. What's your taxable income? In this case, it's 300,000. That's your taxable income. Now, what's your income tax due? Refer to the tax table. It is 20% of the excess, starting from 250,000. So, what's the answer here? It's 50,000 times 20%. That's 10,000. How about the percentage tax, which is 3%? Get your gross sales or receipts times 3%. 33,000. Let's have another. Now try this one. You are given gross receipts of 4.25 million, cost of sales 2.15 million, operating expenses of 1 million, and you are tasked to compute the taxable income, income tax due, and then output VAT. Why output VAT? Because you exceeded the VAT threshold, so you will be paying value added tax. Now let's set the regular income tax model. Your gross income is 4.25 million. Your allowable deduction, it's itemized deduction because there is no mention of what to use. So it's 2.15 plus 1 million, it's 3,150. Taxable income is 1.1 million. Income tax due, start with 130k plus the 30% of the excess of your amount over 800k. So inside you have 300 times 30%, 90k plus 130k, that's 220k. Now how much is the output VAT? What's the basis for the output VAT? Your gross receipts. So 4250k times 12%. It's 510. Now let's try this one. Gross receipts 4.25 million, cost of sales 2.15 million, operating expenses 1 million, and you are using OSD, optional standard deduction. Task to compute taxable income, income tax due, and output VAT. So let's set again the tax model. Gross income is 4 to 50k, and then for the allowable deduction, you are using OSD, so that's 40% of your gross receipts, right? And that is 1.7 million, giving you a taxable income of 2,550,000. So given that, what's your income tax due? First, get the basic amount. It's 490,000 plus 32% of the excess of your amount over 2 million. It's the answer. It's, I'll just write it here, 666,000. Now what's the output VAT? Get your gross receipts times 12%. It's 510,000. Okay, so let's have another. Now let's try this one. Gross sales 1.8 million, gross receipts 400k. So you are not VAT in this case because you were not able to exceed the VAT threshold. Cost of sales 1.325 million, operating expenses 320,000, and you are using OSD here, and you are tasked to compute the taxable income, income tax due, and then the percentage tax because you are not VAT. What's your gross income? It's 1.8 million plus 400,000. So this is 2.2 million. For the allowable deduction, it's OSD. So, and that's 880,000, leaving you a taxable income of 1,320,000. That's your taxable income. For income tax due, refer to your tax table. You start with 130k plus 30% of your excess over 800k. And that's 286,000. How about the percentage tax? Just get the sum of the two. 2.2 million times 3%. This is 66k. And that's it. Now, last item. You're given gross sales 1.8 million, gross receipts 400,000, cost of sales 1.325 million, operating expense 320,000, and you are using the 8% option because you were not able to exceed the VAT threshold, and you are tasked to compute the taxable income as well as the total tax due, meaning the combination of your income tax and business tax. So what's your gross income? 1.8 plus 400, this in 1,000, 2.2 million. How about the allowable deduction? For allowable deduction, since you are using the 8% option, your deduction is 250k. You don't use cost of sales, you don't use operating expense, you don't use OSD, right? For 8% option, the deduction is 250,000. To get your taxable income, this is 1,950,000. So that's the answer. And then for the total tax due, it's your taxable income times 8%. The answer is 156,000. And that's it for this video. In the next, I'm going to discuss mixed income earners naman.